All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
Today we're going to talk about the utter disaster that happened with Netflix stock this week and see whether or not that's justified and give a little bit of a valuation picture on them.
Yeah, but you still wish you had your Netflix short. If you guys like this kind of entertaining stock market content, we're just two stupid guys trying to figure everything out. Give us a like and subscribe. Okay.
All right, with that, we'll get to it.
Two Stupid Guys Trade Stocks.
All right, this is the chart here. Let's see what do you see?
Yeah, I had to zoom out real far. It's probably hard to read. There's a bar here. You just can't see it because it's so small.
Yeah, I got to like zoom in on that one,
Yeah, what I wanted to show was, you see this dip here?
Yeah.
Okay, so this is COVID. So we had to zoom out all the way to, COVID days. You can see basically at the peak before COVID, and then as it came back, that's where this giant support is. Now let me zoom in by 95 months here. Okay. So it almost ruins the chart because it squishes everything up here because the drop is so crazy.
Yeah. 20%. That's a legitimate drop.
Yes, 20% is hefty. Vinny's going to tell us if this was justified. I'm excited for that.
Yeah.
Definitely a hefty drop. We did put in a hammer, which is a good sign. This 380 mark is, like I said, the top and the recovery of COVID. This is insane volume. Do you see this big scary bar?
Yeah, it's a big scary bar.
I want to do something real quick.
Oh boy.
So if we get rid of that big scary bar, look at all these other volume bars. We got some big days here, right?
Yeah, that's pretty disproportionate.
And then you put that bar in, and it's just like, okay, well, this is nothing. It was hitting like 10 million shares on a really solid day, and then it hit 60 million shares on this day. 10 million was high for them.
Yeah, that's impressive.
That's rough. It's hard to,
Very much so, yeah.
It's hard to say if this is going to go lower. We only have 1 day of data, but this hammer, I would like to see what happens on Monday, but could be a short-term buying opportunity. Depends on what you say here, Vinny.
Yeah, well, we talked about that like last week.
Yeah, and thank God I said that in there. I said, hey, if Monday's a down day, this trade will fail. Yeah. And then it was a down day. I didn't take it. I hope no one took it. But
yeah, I didn't take it. The kind of interesting thing for me from like a Netflix valuation standpoint. So I'll just get into it. This is the headline, right? Plunged 20%, worst day since 2012. They only went public in like 2011. This is what it looks like on Yahoo Finance in their chart. It's this tiny little blip down here, hidden behind this massive volume bar. That's actually that same day.
It's obscured by the volume.
Yeah,
it's in the same bars.
Well, look at stochastics were just chilling down here, continuing this downtrend, right? That says shorting opportunity. At least it was up until this point. It's in the little cascade and then that massive down day.
Right.
We'll see what direction they turn in now. So this is from their press release, and this is kind of the concern with them, right? Is that their EPS has been growing at this tremendous clip of 87%, 83%, and all of a sudden it's decelerated down to 33%. Over here, this little snip, this is actually, I want to say I got this from Charles Schwab, talking about how prediction was about a 40% annualized growth rate for their earnings over the next 3 to 5 years based on analyst assumptions, right?
That's really
all right. This is what I hate about them, though. So really what EPS and cash flow should really be good proxies for each other, meaning they should roughly represent each other. If you notice this interesting pattern, though, is like here's diluted EPS, consistently positive, right? If you look down here, free cash flow, pretty much consistently negative. Does that make sense?
No, I didn't realize that's very negative for how much they're making.
So, I must credit, if you haven't watched Cameron Stewart CFA, his financial channel here on YouTube, and he did a Netflix analysis. God, it was back in 2020 at one point. And, for those of you who aren't aware, he's actually a CFO as like his day job. So I trust his interpretation of financial statements to a pretty high degree. And he was one of the people that kind of really highlighted this as being pretty inappropriate. You know, that they're not. They should jive, and they don't.
The problem is if he was shorting that in 2020, he lost a lot of money.
Oh yeah, I mean Netflix, the stock has been an absolute like powerhouse, right? Like 50,000% return since its IPO. It's ridiculous. So going short is definitely a touchy thing to do when it's a company like that. It's like shorting Tesla, right? And
Right.
At least Tesla has a little bit more kind of interesting things going on there. So this is a problem, right? This is from their cash flow statement, and if you're looking at this right here, you see the net increase or decrease in cash and cash equivalents. This is over the last I forget how many quarters basically, but if you look at it, they really only had one quarter where they ended the quarter with more cash in their checking account than they started with.
It's not great.
Yeah, does that make any sense for a profitable business?
Okay. Well, they're paying for growth essentially. They're trying to pay for as much growth as possible. The growth now has started to not be what it used to be.
Exactly. Right. So that's basically what I'm saying here from a valuation standpoint is that this was a one-trick pony. They were growing like wildfire. And as soon as you take away that one thing that they were doing great, you get these massive downward kind of revaluations. That's basically what my premise is here. They've been financing themselves with debt and equity that they've been selling. Granted, the number of shares they've sold has not been astronomical, but that's what they've had to do to continue funding their operations and continue making these shows. The way they expense their shows is different than what Disney does. So they're actually putting their content onto the balance sheet as an asset and depreciating that over 4 years. Disney will take, the amount of money that they have to pay for the actual production of the show and list it as an expense.
Okay.
They're not expensing stuff.
I mean, I feel like it should be an expense because it is an expense.
Exactly. That's why they're losing cash. They're spending cash, but they're showing a profit.
How is that legal?
I can't speak to the veracity of that, but I can tell you that this is enough of I don't understand it. It's out of my zone of competence. Therefore, I will not invest in it for me. So that's why, to me, Netflix is uninvestable. Maybe it might be an Amazon-like story where there's never an entry point that makes sense to me. That's fine. I'm happy to miss stocks like this. And this is one of them. If you look at the compression now post this massive 20%, they're now trading at an enterprise value to EBITDA ratio of about 10. They were trading at like 30 not that long ago.
They were okay.
Yeah, that's where Disney trades. But the difference with Disney is that, like I said, since they're expensing their production costs, their enterprise value to EBITDA is a more useful metric than it is for Netflix, in my opinion.
Right, because it's not correct math being put into the actual equation almost.
Yeah. So I know not something you probably hear too often. And yeah, I know it's like I'm saying this like after they've already had like a major down day, but it's not something that
No. You were shorting them at 600.
Yeah. I did. I made a little bit of money. I have a couple other things I went short of as of right now too. Not touching Netflix, but we're going to do a separate video on how you can profit from this kind of bubble bursting or stock market crash. We've seen, God, I couldn't even tell you how many videos have been put out on YouTube in the last like 48 hours. The stock market's crashing. I haven't seen a single person tell you like how to profit from it.
Yeah, which is funny because we both did this last week. I had a pretty good week.
Yeah, I finally crossed into the red for the year this week. I think I'm down 2% for the year right now.
All you have to do is if you go super, super red the year before, it's not that hard to just go green. It's a strategy. I'll explain it to you later. Don't worry about it. It's complicated. Real quick.
So what do you think?
Before we get off, what price would you buy Netflix at?
I don't know. It would have to be something super appealing. I'm tempted to say somewhere in the high twos, maybe. But I don't trust the company, So to me, like that's I wouldn't take it if you gave it to me for free. But at that point, maybe.
Wow, that's a statement.
Yeah, I know.
Let's record that statement.
It's true, right? You have to trust the management that they're doing the right thing, and like I don't see that when I look at Netflix.
All right, fair enough. I appreciate the conviction. I want you to remember, and this is on YouTube. You wouldn't even take the shares for free.
Yeah. Yeah. I'll stick by that statement. I mean,
I'll take Blockbuster for free.
I mean, Blockbuster. Man, I still probably have a Blockbuster card around somewhere. Okay.
Actually, I probably do too. I went there a lot.
Yeah, that's how you can prove you're over 30. Exactly.
All right. Sweet.
All right, guys. Yeah, let us know what you think about Netflix. Do they deserve it? Do they, any of you guys holding Netflix plan to buy Netflix now that it's come down a little bit in price? Kind of
Yeah,
cool.
and if you're gonna swing it, I'm thinking about it.
Thinking
Have
about
a good one, guys.
See ya.